Hey traders, just doing an update on the Bitcoin chart. Here we are on the weekly chart. We've got the an uptrending line here which didn't connect the third touch but broke through on the third, and then it's actually come back below that. We haven't actually closed yet. On Monday morning we'll have closed below that. That'll be around about 85,000, 86,000 if we find support there. But if we have a look at the 200, like we've had our first bounce on the 200 down here, second and third bounce on the 200 there, but we've got first stage base here, second stage base here. If by the looks of things, on the weekly chart, we haven't broken out a third stage base yet. So unless we're counting this as first stage base, second stage and third stage, but I'm seeing it as this is first, second, and we're yet to break out a third base up here. But anyway, the 50 is very close. It's, we haven't actually come down and touched that yet. Even though we've been very close, we still haven't done it. Still a little bit of a way. I'll just check. Let's just have a look and see around about what the 50 is at. So 74,750 around about, and we came down last night to a low of 78,179. Anyway, so where are we going to go from here? We're going to come back down and find support on the previous resistance and the 50, which would be a great place for us to find support at. But if we go back to the daily charts, let's just have a look there, because we can see on the daily charts that there is a very nice bounce. Stochastics oversold on the and it's at the 200. So if we have a look at that, the idea is not to go and buy this straight away or reject it either straight away. The idea is to have a look at this scenario in the history of this chart and go back and see exactly what it looked like and what actually happened after it. Like, did it get a bit of a run? Did it get and how much was that run for? And did it come back down, or did it shoot through and keep going further? So if you go and find 3, 4, 5, 6 of these or whatever, then that'll give you a very good idea as to what you should be doing in the market right now. And also another thing is, it's a good idea always to keep notes. I always, after I place a trade and I'm finished up with the trade, I've got so many notes on my chart, but that's exactly the way I want it, because it will remind me on the way up and on the way down exactly what my thought process was, where I had my stops in place, where I had my buys in place, were they right, were they wrong. That's really the only way that we can improve, is by recording everything we do and identifying the mistakes that we make, and so we can eliminate those. Because the main thing is, we want to be buying right. When the Japanese rise traders were saying that this has a very high chance of reversal, which this one does. This is a hammer on the 200 with increased volume. Most of that was buying volume, because you can see by the little red body. And also on top of that, we've got stochastics oversold. If we have a look back here, like there was a hammer there, even though we've gone up and we pulled back, there was a hammer. It didn't really go up very far. I mean, even if you were to buy it there, you actually probably got stopped out of that one there. So that one, that's one that didn't work. Here's a hammer. It went up a little bit and then came down, and then from there on the market was turning. There's a few things that I wanted to show you just from the start, and the reason I want to show you these is because on your journey with trading, you tend to find candlesticks that are like guideposts on a trail, like on a map. Getting from A to B. These are a little bit like guideposts. And as I explain it, you'll probably understand a little bit better. Here's an engulfing, so there was definitely an entry there. That was an engulfing there. I don't like how it sold off. I don't know if I got in there. I probably got in there a bit, but here I definitely would have got in. Hammer there, yep, that's pretty good. Engulfing there, yep, that's pretty good too. Another engulfing there. But have a look at this one here. This here is a wide and loose candle. So first wide and loose candle. So we've come up here and we started creating a base, and now we've got wide and loose trading with increased volume. So we've got 2 distribution days here where institutional sellers were taking advantage of these high prices. Then we've got another institutional selling day here, and then here's the big one. This one here it's wide and loose. Basically, this is big money cleaning up all the so let's just think about the psychology of this, right? It's opened here and it's traded up, so it's collected anybody that was buying the breakout of this candle here, and got into the trade, and I was probably in there as well. And so they got into the trade, and then when it came back down, they probably would have got stopped out of the trade down here. But not only that, they've come down here and collected all the short entries. So they've got not only got the bull traders that have gotten in here and been stopped out, but they've got the short traders that have gotten in here and then come up, and then they're going to be stopped out very soon, you'll see. But here, when we see a nice advance come up like this, and then we see one of these wide and loose trading candles with extra volume, that usually represents a short-term correction. Sometimes it could be a long-term correction. But anyway, we need to keep in mind those candles there. And if we just keep on going here, we can see 2 more candles of distribution. This is institutional selling again. Even though we've got a hammer here, at the end of the day, there's more volume on the selling side, or is a selling volume. Then we've got an engulfing, but it didn't close above this candle here. Just keep your eye on this candle here, because this is the important one here. This is done by big money. Institutions do that. And they do it basically to put money out of our pocket and into theirs. So here we've got a perfect doji, and then we're breaking out again, going up a little bit higher. So that's good there. So now here we are. Like if you were to be buying this breakout here, and I don't really like this very much, simply because we're just like crawling higher. We're not making a high and then a low, then a higher high, and then a higher low. We are kind of on the macro sense, but really, like this is just like an uptrending kind of thing. I mean, it could keep going, but yeah, not really. And then all of a sudden, this one here came up. And so this one here, to me, was a pretty convincing sort of thing. We can see some pretty scrappy trading coming in here. And then all of a sudden, we've come up and we've got stochastics in the overbought area. And we've got, I think it was a gap ups on these ones here that were what alerted me. And I thought to myself, hang on a minute, things have gotten bad here. So it was on this day here when I was saying that, Japanese rice traders at this stage would be saying sell. So it was around there somewhere. I can't remember exactly where it was. I think it was this day here that I, just at the open there, I started selling. But anyway, I ended up getting around about 40% out of my positions. So, but then when it came down here, so I was looking for entries again, like pretty much as soon as it bounced on the 50, because that's usually a good place to start buying. But anyway, as you can see, what happened? And then this one here, so I thought we were going to be taking off from the market again. We've come back down here. We've cut these lows here, so we've got all the stops from there, and then we've taken off. And anyway, I was wrong. So another thing that we need to keep an eye out on as well is that when we get an engulfing pattern or some sort of a massive big push like this, let's just call them engulfing patterns for now. If we get an engulfing pattern and then we get a rejection of the engulfing pattern, let's just keep our eyes open for potential shorting that engulfing pattern to the south side. And because let's just have a look at the result of a failed engulfing pattern. Just keep your eye on those, because when we see these high up here, like that engulfing pattern there, they tend to, especially when stochastics are in the overbought area, closing below the 9 EMA, second one closing below the 9 EMA, so, and the 50. So this one here was a representation of, big trouble really. So we've got our 2. Actually, we've got 1. This one here I didn't really count that very much, simply because of bouncing on the 50. This one here was more important because it it closed below 3 moving averages. Then as we're moving over, this is the day that Trump got in, and we can see here that we've come up and we've taken out. We've picked up anyone that was buying that tip there, and on top of that, we've so any shorts that were in from down here have actually, they've finished up. Their stops would have been definitely above here, and so they would have been taken out. Anyway, it's come back down there, and so this here was massive selling. Even though it's a green candle, it went up and then came all the way back down, and so like the sellers finished the day pretty much, even though it was a bit of a green day. And then moving on. So there's 2 more things that I wanted to point out on this chart here before I move on to 2 other charts, just quickly. And so the first part is, as we're coming back down here, so we're below the 50 again now. We've got these dojis here, and I thought it was tightening up nicely. This here is a reversal. Like there's massive amounts of selling selling that came into there, and then buying came in and turned around and turned green, and then went up from there. And then we've come back down below the 50 again, which is a pretty negative thing to have happen. And then we've got these perfect looking dojis. Like this is massive indecision, and usually we get explosive trading coming from this. Now, if we go through this day by day, and we'll just open it up a little bit more so we can get a closer look. And as we're going across these dojis here, so we've got an engulfing sort of here, closed by the 9, nothing really, and engulfing to the south side. So this is pretty confusing trading. Another engulfing to the north, engulfing to the south. Here we've got a harami, and then we've got an indecisive candle here, and then have a look at this candle here. The difference between this candle here and all these before it is that all these have wicks on it. They have buying pressure down below here. If you have a look at this one here, it went up just a touch and then came down through the 9, turned into an engulfing pattern and closed there almost exactly on the low. So this candle here is telling us that now we're in a confirmed downtrend, basically. So we had the Trump thing there. Let's just go back a little bit further. This is the wide and loose candle here. Let's just go all the way back here. So when we've got a rise and we've got one of these here, this can only just pull back to the 50 and then take off again. But this here, you'll find these at the beginning This is big money signature, so just keep your eye on these. This is big money signature saying that distribution is happening now, and we're going to start taking profits. There's a good chance that the market could turn around and go south from here. But usually what they do, they'll push it up and get rid of. This is wide and loose trading. This is where you want to, when you see this, be prepared to step away from the market for a bit. But anyway, so back to this one here. So here is the full embodied golfing candle below the 50 moving average. So this one here, I was quite concerned about this one here, and especially that one there being, that's massive buyers coming into the market there. And then all of a sudden this one here turns up. This is a convincing story to say that there are no buyers in this market at this area. Here there's only sellers, and that's not a very good thing to have. So then when it's come up to here, there's a thing that, I coined it the armpit trade, because if you've got there, let's just say, we'll just wipe out this bit here, but let's just say hypothetically, you got a left shoulder here, a head, and a right shoulder there. I do like the right shoulders to be under the 50, and I like to take the, if it goes up here and tests the 50, and then comes back down and fails, I want to be looking for entries, in these kind of areas in order to place a short with my stops above the high. But another thing that I really like to do as well is, when it's not in such wide and loose kind of trading, is that when it comes down, it'll bounce, like it breaks through the 50 on the south side, then it'll come back through onto the, head north again, hit the 50 moving average, but usually the green will hit the 50 moving average. The very next candle that hits the moving average, that comes up and touches the moving average, and then comes down and turns red, I'm shorting right there, immediately on that candle right there to go south. And it's exactly the same as when we go north. When we go north, we want to, come up through the 50 moving average, come back down, find support, give it a set engulfing or something off there so that we know that we're going to be heading north. And here, in this case, we're heading south. So just, I just want to kind of wrap this up and don't want to make it too long a video. If we come have a look here, so we're bounced on the 200 moving average. We're not quite in that box here, yet. We're, because this line here is the previous support. Previous resistance, but now becomes new support. So around about the 74,000, 73.8 or 74,000, somewhere around there is the is what we're looking for. All right, traders. I'm just going to move on to a couple of other charts which look similar to this, and one of them is Stellar Lumens. So this here, I really do like this. This looking, this kind of thing from Stellar Lumens. If we have looked here on the hammer here, like it didn't work on Bitcoin, but if you would have bought this hammer here with your stops below the low there, you still would have made some profits before it came back down. Now we're looking at doing the same again. We've got stochastics oversold. Now this comes down to the same thing that I was saying before. Don't take my word for it. If you go back and have a look at when a market came back down and bounced on the 200 and gave a hammer reversal on the 200 with stochastics oversold. Just take those three things. So we've got a nice big push, and then we've got a kind of a relaxing pullback, but like it would have been stressful for some people in the markets here with Stellar Lumens, because they've made such good profits, and all of a sudden their profits have come down to about 50% retracement. Let's just have a quick look at that 50% retracement, somewhere down around there, and we'll take it. So we're going to go to the top there and drag it all the way down, all the way past price now. So I'm going to just get to the top. And so if we have a look here, so we're not quite where it's 61.8, so 50. So really what, if we were doing the Fibonacci numbers, we would have been looking for reversals in this box around about here somewhere. And so now we've come back down under that box there. If we arrive back in this box above the 9 with volume there, that would probably be a buy. But, for me, I tend to find myself a little bit more of an aggressive trader. So, what the sort of trade I would rather get into is, let me just show you. If we were to go into this market here, if I was going to be going into this market here, what I'd be waiting for is the very next candle. So here's price right now. The very next candle to open there, start trading red. And as soon as it goes through here and turns green again, which is the open price of yesterday, turns green, that will be my entry. But I do want to see it go red first. Even if it's a tiny bit, I'd rather see it go red first with my stops below this low here. In saying that though, the risky part to this trade is that Bitcoin has not reached its potential support yet. I mean, it's on the 200 now, but on the weekly chart, like this is it would typically go down and touch previous resistance, becomes new support, which would be around about 70. Like to me, this just, even though we've got the 200 there, it would not surprise me if big money, like there's probably liquidity down here. There's probably other dollars down here that have got stop losses and, like cheap coin basically. So if they come down here and get that, they've got another pocket full of cheap coin from investors, from weak investors that didn't want to hold. But anyway, if I was to be buying, so if Bitcoin's in this kind of position here, it gets a little bit difficult to be buying these kind of entries here. And here we go. Another one is Sui. Looks very much the same. So anyway, traders, I'll leave it at that. I just wanted to bring some of that to your attention. For me, I find those kind of things important to for me, it has to be. We need to go through the charts and be finding things that happen, because the market will give you little signals and hints and details and things like that, like little guideposts on a map, going from a low to a high. And this one here is one of those. And then Doji, stochastics overbought, and then this one here, massive big, almost a shooting star looking kind of thing. But anyway, it didn't get past there. And then over here, we've got a full body. If we have a look at that, like the full body engulfing, closing below all the moving averages, that there is, that's the problem. So anyway, traders, I'll leave it at that. I hope you have a good day. Talk to you again soon. See ya.